what is non-farm? I'm sure we all have heard of non-farm payrolls, but it's really just a measure of the net change in jobs month over month in the US particularly. Many other countries have it, but I'm of course going to be reflecting on the US market. Now, it does exclude those areas including farming, private households, proprietors, nonprofit employees, and active military, and like so many other things that we talk about. All of this data comes from the Bureau of Labor Statistics. And keep in mind that this accounts for 80% of the workers that make up GDP here in the States, 80% of the workers that produce 80% of the total value of GDP. As for the farm aspect of things, that is all handled by the U.S. Department of Agriculture. If you're curious, is all I get it. Why the exclusions? Why isn't farm a part of it? Why is it non-farm? That's a weird name for a financial event, right? Well, it's really comes down to history, and it comes down to how complicated farm work is. This is just a quick aside, but farm work is complicated by seasonal fluctuations, unpaid family work, considerably high level of part-time workers, etc. You have to remember that this report was made back in the 30s when everyone and their grandmother was a farmer. So when we were producing these reports and making these ideas on how to track things like non-farm payrolls, we had to consider the current culture at the time. The current culture at the time included everyone having a garden in their backyard. So everyone was a farmer in non-farm payrolls, hence why it's excluded now, right? Now, non-farm employment here in the States, it's part of a larger whole, as it is in several other countries, but oftentimes it's reported as one piece of the puzzle. So NFP here is a part of what's called the Employment Situation Report. This report is broken up into two surveys, which include the Household Survey and the Establishment Survey. The Establishment Survey being the survey where non-farm payrolls are reported. The former survey, the Household Survey, is unemployment data by itself. Oftentimes, you'll hear people talk about the headline figure. This applies not just to non-farm, but a collection of different events. The headline number for non-farm is this number right here. Last month, we saw non-farm payroll employment rose by 253,000 in April. 253,000 is that net change in jobs that we were talking about. The unemployment rate is the other half of that puzzle, right? So we talked about how there's two pieces of the puzzle here. So whenever you see non-farm in the US, it's always reported in the employment situation in for whatever month. In this case, April of 2023, last month's figure. When you dial in a little bit more, you can look a little bit more at some of these details, and you can see different, very individual pieces of the puzzle. This is why non-farm is so useful for so many different traders and investors. Look, if you're trading a currency like the US dollar, of course it's important that job numbers are changing. But if you're trading something like gold or you're trading equities, it may not seem as important. I'm here to tell you that it absolutely is. Because what if you're looking at something like you're trying to trade gold miners and you're trying to find great opportunity in gold miners? If there are less people working and mining, that could potentially slow down the pace. Or let's say you're looking at something that is experiencing slowdown. For example, retail trade has experienced slowdown several times over the past few figures being printed. You can start to wonder what's happening in that space, and you can start to investigate what's going on. That way you can really have better control over your investments and see what's going on, because this number is going to include a variety of different industries. Everyone from construction to law firms are going to be included in that. And like everything else we talk about here on this channel, it all boils down to the economic basics, where wages and the amount of labor are really going to determine this chart here. We're talking about the supply of workers and the demand that companies have for workers. If that supply changes, that the wages are going to change and the amount of labor is going to change, and vice versa. And that has an effect on the inflationary picture. Um, as you look at something like NFP, you can dial in a little bit more and talk more about that inflationary picture from different perspectives. In this case, take a look at, for example, we just talked about retail trade. Retail trade has so many openings right now in the US. If everyone that was qualified to get a job in retail trade got a job in wholesale and retail trade, only 75% of the available jobs would be filled. That's a 25% deficit, right? That means that demand is higher for these people. What happens when demand is higher for this curve? Wages go up. And when wages go up, unfortunately, inflation has a tendency to go up. Now, this it's not like this chart is one for one. It's not parallel. Causation isn't always correlation, of course. But as wages go up, generally inflation goes up. And this guy is never happy when inflation goes up. This is what happens when, you know, there's more money in the market, prices are going to go up as demand goes up and supply doesn't change. This is one of the reasons why guys like Jay Powell, who has complete control of that printer, this is why he's always talking about it. Whenever you look at the Federal Reserve meeting minutes, you're always looking at him talking about the inflationary picture and talking about issues of unemployment. And why before, when Jordan said, hey, Britain was excited about a zero point 0.1 change. I know zero point 0.1 might not be that exciting for any of us. If our accounts moved positive or negative 0.1%, we probably wouldn't bat an eye. But remember, these are millions and millions of jobs. So 0.1% change in either direction is an indication of either positive activity or negative activity from the perspective of a central bank. And remember, this is a forecasting number. This is a leading tool. This is a leading indicator to potentially where we'll go in terms of a central bank and their decisions on interest rates. It's not as if when NFP prints, it's going to absolutely mean we're going in one direction or another. It doesn't mean that. It means we could or we couldn't. It really depends on what's happening in the whole picture. So just like with any other event, you have to take it in context here. We're looking at not just the NFE picture, but we're looking at the unemployment picture. We're looking at the interest rate picture. And with everything together, we could have a really great macroeconomic understanding of what's going on in the markets. That's really all I have for you guys. I really appreciate you going through the whole nine. I know NFP isn't always as sexy as it once was, but we really appreciate you guys sharing these types of ideas with each other and continually learning the process as we move.
Outstanding. As always, so consistent, Aaron. I absolutely loved that little presentation, guys. If you did enjoy that as well, make sure you're showing some love for Aaron. Make sure you've given him a big congratulations